Traders, welcome back to the SPACs Attack, where we talk everything SPACs. And if you liked seeing the green on the movers list, definitely smash that like button for me, guys. Hit the subscribe bell below. I'm happy to be back on SPACs Attack. I know we got my man, the brains to the show, Chris Katje.
Hey, Mitch, what's going on? How are we doing today?
What up, man? It's good to be with you. I'm happy to see you.
Good to be back.
Yeah, man, we're back. So, hey, if you guys are happy to have the SPAC boys back, definitely hit the one in the chat. I want to see the love. Let us know what's going on out there. What are you guys looking at? What do you guys want to talk about? We've been gone for a little bit. There's a lot of headlines out there. Looks like they're missing us. And guess what, guys? We actually miss you guys too. You know, Chris and I do this every single day, and we've gotten to the point where when we don't do this, we just feel like there's something off. So definitely, guys, smash the like button. We appreciate being a part of this community just as much as you guys do. So let's get into some headlines. I know you got a lot to talk about, Chris, so I'm going to let you take over here and take us back.
All right, guys. Yeah, so a couple days off tech conference hosted by Benzinga here. I did drop a link in the chat. Guys, if you missed us and you want to get that SPAC news every morning, sign up for our SPAC news. Even though we were off the last 2 days, that newsletter did go out to subscribers. It's free, sharing some information on SPACs, on deals, on rumors. So make sure you sign up there. Then turning to headlines, we're going to try to hit, all the major stuff from the past couple days. But we also have a pretty exciting interview coming up today where we're going to talk SPACs and IPOs. So excited about that. Up first, I just want to hit quick on the overall SPAC market. So we're seeing a lot of, negativity coming at SPACs. I have talked about, oversupply. We're seeing too many. We're seeing some deals done at high valuations, but I want to point out that over the last 2 days, we also saw IPOs of DigitalOcean, Vizio, Cricket, and Diversey Holding. All those IPOs are trading below their offering price. So, guys, it's not just SPACs. There are IPOs that also trade below where they go public at. It's also stocks. So don't group SPACs together as one whole. Sure you look for the good ones. There are going to be bad ones. There's going to be bad deals. This is no different than traditional IPOs, though. Ignore some of that noise and pay attention to what you own for the short term. Do your own investments. And then turning to headlines this morning, we have IP, which is taking SoFi public. So they announced a new platform. They're going to allow access to IPOs before they're traded on an exchange. So typically that's only reserved for large institutional investors or some of these, pre-IPO exchanges. But eligible SoFi members, so all you have to do is have at least $3,000 invested with SoFi. You're going to be able to participate by placing an order for shares of a pre-IPO company. Super excited to see what this looks like. Robinhood is also exploring their own platform to do this, and they look like they will be offering shares to customers first in that IPO. We'll hit on that later during our interview today. And then we have NGA, of course, merging with Lion Electric. I do own shares of this company. They secured their largest truck order to date this week. They announced 100 zero-emission trucks from Pride Group Enterprises. This is a purchase order. The majority of the trucks are expected to be delivered during 2021, with the remainder of deliveries expected to take place in 2022. So this isn't that far out. This is later this year in 2022. And again, this is the largest deal that Lion Electric has ever signed. Shares were up 5% yesterday. They have gotten some attention here. Keep an eye out on this one. Shares have gotten hit over the last couple weeks. But again, this looks like a great long-term company, and you can go back and watch our interview with the company as well. Merger between BFT and PaySafe was approved yesterday. So current ticker BFT, the new ticker is going to be PSFE, expected to trade beginning next week. So keep an eye out on that one. going forward. We've talked a lot about BFT and PaySafe. And Reuters reporting that the SEC is inquiring about disclosures from Wall Street banks over the SPAC process. So this could lead to formal inquiries. Currently, it looks like just gathering information. Looks like it centers around disclosures, talking about, the founders, the shareholders of those SPACs, what investments do they have, and how to make sure all that information is communicated. So I've said for, a little while now that I think we do see some changes to the process. I think when these SPAC deals are announced, the percentage that shareholders get needs to be communicated in the press release rather than just in the investor presentation slide deck. But we'll see what happens to this new report. And two of our space-related SPACs, we have VACQ and SFTW. So this is Rocket Lab and Black Sky. Of course, Rocket Lab launched that rocket earlier this week with a Black Sky satellite on board. Those two companies extending their partnership. So Black Sky signed to launch 9 of their small satellites across 5 additional missions this year. That's the most spacecraft that Black Sky has ever committed to a single launcher. Keep an eye out on both of these SPACs, VACQ and SFTW. And then we have ARK Fund. So just from yesterday, as again, we were off the last 2 days, I saw that added more open shares, open door. So 900,000 shares being added across 2 ETFs, added more Butterfly, BFLY, and also SPFR, which I do own. That's that recent SPAC deal. Velo 3D, a 3D printing company working with SpaceX, has now been added 2 days in a row to the ARK ETFs. And then Arrival, formerly CIIC, that new ticker is ARVL. That merger deal is complete and now trading under that new ticker. Again, great electric vehicle company. Go back and watch our interview. You'll hear more about electric vans, electric buses, and then also those micro factories, which I think are, a huge growth area going forward for that company. I'm a big fan of Arrival. If it's not on your watch list already, pay attention because we have dipped back the past couple days, and you could see a good entry price here for the long-term investment. And then turning to rumors, a lot of rumors announced this week. This morning, we have Axios and The Athletic, 2 digital media properties, in talks to merge, according to the Wall Street Journal. And they're also exploring a SPAC deal to go public. Remember, we also have BuzzFeed exploring a SPAC deal. So looks like digital media could be one of those spaces with some consolidation and some public deals via SPAC. So keep an eye out on some of these SPACs that are targeting media companies or have experience in the industry, going forward. We have Apollo weighing the sale of McGraw-Hill Education and exploring a possible SPAC deal. No tickers were mentioned in that rumor, but keep an eye out. McGraw-Hill Education, a well-known company in that space. We have ROCC, which is a Roth SPAC, in talks with Reservoir Media, which is a music publisher that represents copyrights and master recordings. So artists that they have rights to include Lady Gaga, Sheryl Crow, and Bruno Mars. Keep an eye out on this one with the streaming and digital music. We are seeing more monetization of music rights going forward. And then also, who could forget that in the music space, you also have the possibility of, creating NFTs with these artists. So keep an eye out on this ROCC. I haven't dug in to see what other artists are in that library, but those 3 names obviously well known to most viewers here. And then our other big rumor, we have ticker DEH. They're in talks to take Vicarious Surgical public. This is a startup backed by Bill Gates. Definitely worth keeping an eye on. So the Gates Frontier Fund, also Eric Schmidt, formerly of Google. We also have the Yahoo founder, Jerry Yang, and Salesforce founder, Mark Benoff, all investors in this company. And then one of the creators of Vicarious Surgical, his father is actually a co-founder of Desktop Metal, So nice connection there in the SPAC world. I am seeing some reports out there that Elon Musk and Mark Zuckerberg are also investors in Vicarious. There's actually two Vicarious companies. One is Vicarious Surgical, and then one is Vicarious, which is a robot company. So to me, I'm seeing that they are two separate companies. So Musk is not involved in this. But again, you have Bill Gates, a backer in the company. So keep an eye out on this one. And then we turn to our deals. Going to try to run through these. We have GNPK announcing a merger with Redwire Space. This is an innovative space infrastructure company. Revenue estimate of $163 million in 2021, $237 million in fiscal 2022. This was done at a valuation of $615 million. I'm a big fan of this valuation here. Instead of seeing these large billion-dollar SPAC deals for companies, years away from revenue, here you have one with, hundreds of millions of dollars in revenue, going public at a $615 million valuation. This is a space infrastructure play. It's almost like a mini space ETF in itself, working on orbit, in-space manufacturing through 3D printing, robotic assembly. They're looking at finding partners to help expand their operations, proven capabilities, and transformative technologies in 5 key growth areas. So that's on-orbit servicing, assembly, and manufacturing, low Earth orbit commercialization, digitally engineered spacecraft, space domain awareness, and advanced sensors and components. They have a significant opportunity in the fragmented space infrastructure market, a backlog of more than $150 million. They see revenue growing at a compounded annual growth rate of 72%. So again, those estimates, $163 million in 2021, and then all the way out to $1.4 billion in 2025. I'm a fan of this deal at that valuation. And then our deals announced today, we have ticker SV announcing a deal with Arrow Farms. This is a indoor vertical farming company similar to App Harvest, APPH. Deal done at $856 million. Revenue of $4 million estimated this year, $13 million estimated next year. I'm going to have to dive in a little bit more, go back through that App Harvest presentation to see how these two companies, compare and fare here. I'm a fan of the industry, but to me, this valuation looks a little high without really diving into it. So more information to come. Then our big deal, we have BOWX announcing a deal with WeWork, the leading flexible space provider. This was rumored for a little while now. So revenue estimates $3.3 billion, fiscal 2021, up 1%. $4.58 billion, fiscal 2022, up 41%. Being done at a $9 billion valuation. Again, WeWork is backed by SoftBank. And remember, WeWork had a valuation of $47 billion back in 2019. So big fall over 2 years in valuation here. And also, as we see the rise of work from home, what's WeWork's future in that shared working environment? So this one is actually up big this morning. The CEO was on CNBC, so lots of love there. And then turning past our deals, I want to remind everyone that the ARK Fund Space ETF can launch as early as next week, Monday. So keep an eye out again on all these space names. We did a whole show on it 2 weeks ago talking about space SPACs. But that is a big catalyst going forward. And then next week, we have the vote on the merger NPA. And then we also will get earnings from Butterfly Network, BFLY, and Romeo Power. March 30th, I do own shares of RMO. So that's what I've got for headlines and those deals. I know that was a lot to get through. Again, we missed everyone the last 2 days. It's playing catch up today, getting through these. So let me know in the chat if there's anything else that we missed that you think we should cover after the interview, and we will try to certainly circle back. But that's what I've got today. Looks like we're trying to get some audio fixed here. So again, space SPACs. So, Kathy Wood, ARK Funds, launching that ETF on Monday. Some of the names we've talked about, we have SPCE, Virgin Galactic, which I own shares of, SRAC merging with Momentous. I do own shares of that. We have VICQ Rocket Lab, which I talked about today. They are, next to SpaceX, the next leading rocket launcher in the US. That one looks attractive here, with that catalyst of the space ETF. And then also SFTW, a satellite play. You have NPA, the 5G from space play. And then also HOL, that's Astra, another rocket company. So, keep an eye out on these names. That's a big event to launch this space ETF as early as next week. I think it's going to depend on how the market reacts, what kind of correction we keep seeing, whether or not, ARK goes ahead and launches that on Monday, or if they wait a couple days to get the timing right. Again, they don't have to launch it on Monday. That is the earliest, though, that ETF can be filed and launched. So, and once it goes public, we're going to see a lot of interest in digging into the holdings, finding out exactly which space stocks are in the ETF. We'll also see if this ARK fund gets added to the list of, that email list that goes out every night, right? What is Cathie Wood buying and selling within the ARK funds? Will the space ETF be included in that list? Will we see, these shares start to trade after hours based on if they're being added or, sold from the fund? So, an exciting catalyst, again, in the space industry, and, widely followed Cathie Wood and those connections. So keep an eye out on that. On those deals today, again, BOWX, WeWork, up 11% last I looked. Looks like 8% now. So again, the CEO on CNBC today, highlighting the company, highlighting, the $1 billion in revenue, and then also talking about profitability later this year. But again, this is a significant discount to the valuation 2 years ago. So that could be a positive or it could be a negative here. It could be a negative, that it has fallen so much in valuation, or it could be a positive. You could be, seeing an opportunity to get shares now. And if they can bounce back, and all the return to work business can hit, maybe this is a good long-term play. And I think that's what some investors are banking on this morning. And then the other deal, I highlighted that space one in itself. So GNPK, again, a space infrastructure play, very similar to its own space ETF business. I think that one looks attractive here. And then also DEH, Vicarious Surgical, that rumor, to go public with DEH. And again, that's a Bill Gates-backed company. And then some other big names attached. So that's one I'll be looking at. And again, we're trading under $10 here. Not sure if this will pop on a deal announcement, as we, have seen that kind of fade away in the SPAC market. But, definitely one worth looking at here. And then trying to see in the chat. So, so someone mentioning, MaxR, again, not a SPAC, but a great satellite company, going forward, again, with that space ETF. I think we're going to see some interest again in all the space stocks next week. Someone asking about Monday. Yeah, so Monday is the earliest that the space ETF can launch. So that is based on a calculation, the number of days from the day that initial filing went out for the ETF. So I saw an article out from Bloomberg yesterday, talking about how the space ETF could launch on Monday. Again, we told you that 2 weeks ago, that March 29th was going to be the possible launch day. So stick around with SPACs Attack. You're getting that information here. So what's up, Mitch? What's jumping out there for you? I know we probably want to get back into this interview and then maybe circle back to some of the updates on the headlines.
Yeah, I'll definitely get into kind of the watch list. We'll do like a little bit ticker time near the end here, guys. But one jump right into that interview. Sorry, I had to get out there for a little bit, guys. For some reason, my audio completely cut out. But we're back, baby. So let's go ahead and let's get into our interview, and then I'll go ahead and touch up some of the green looking moving charts that we have today. So let's go ahead and let's get into our interview, Chris.
I mean, that's exciting to hear that we do have some green out there in SPAC land. So I saw that as well. So very excited interview today. Joining us on SPACs Attack, we have John Janerone. He is the editor-in-chief at IPO Edge. Welcome to SPACs Attack, John.
Hi, Chris. Thanks for having me.
Of course, of course.
All right, guys. So the way we normally run things is, like always, I'm going to go ahead and dip out for a little bit. I'll let Chris ask some questions, and I'll be back with some of my own.
All right, perfect. So, John, before we dive into questions, I'm wondering if you can tell our viewers just a little info on your background in the IPO and SPAC space, and then also kind of what is IPO Edge all about?
Sure thing, Chris. Thanks for the opportunity. So I launched Capital Markets Media about 4 years ago, and the first platform was IPO Edge. We have two others, Corp Gov and Exec Edge, but let's focus on IPO Edge today. So we cover all things IPOs. We cover private companies as well sometimes, but mainly companies that are going public. And as you know well, and I just have been listening for a few minutes here, all the action has been in SPAC land as opposed to regular way IPOs. So you can find our content on IPO Edge. We also are syndicated with Yahoo Finance, so it appears there and on Bloomberg terminals. So what we do is inspired by my background at the Wall Street Journal, where I wrote the Herd in the Street column for about 7 years. And so we do a lot of analytical work as opposed to breaking news. So for instance, this morning, a couple deals came out. I hope we can dig into them, especially WeWork. That's a fun one, right? You know, I can tell you what I think based on, you know, what I've read and talked to a couple of investors.
Perfect. So, you know, you've been in the IPO market for a long time. So SPACs were one of the hottest stories in 2020. And, you know, continuing with the supply into 2021. When did you start to notice last year, you know, that this was going to be a huge trend? And, you know, did anyone in the IPO market really see SPACs just taking off like this in 2020?
I mean, no one saw 2020 coming. I mean, that was just bonkers. So I think that I first started following SPACs and did my first roundtable event with some people in the SPAC world in maybe September, October of 2019. And at that time, Chris, it was interesting. You couldn't get away with what you're seeing now. This public markets venture capital theme hadn't really arrived yet. That only happened after, I would say, Virgin Galactic. Back in those days, you were looking at companies that had positive EBITDA, you know, right now. Right, not in 2027. So it changed dramatically after that. And I think what also happened is you had a swell of retail interest. Because look, Chris, as you know, these companies are fun to talk about. People like about flying cars and, you know, electric vehicles and spaceships and all that stuff. And, you know, this morning we got a really cool one with aero farms. So that really, I think, captivated the market. But the truth is, and we can get into this perhaps a little bit later, I think that if I were to give advice to investors, I would keep an eye on some of these companies that actually are profitable now, because I think that spike, that run up that we saw that kind of came off a few weeks ago, I just don't know if we're going to get back to that sort of speculative frenzy in these SPACs.
Yeah, perfect. We'll dive into some individual names here in a minute. One of the things I've talked about, you know, for months on here, and I think we're seeing it more and more, is a possible oversupply of SPACs. So what are your thoughts? Is there an oversupply of SPACs in 2021, and how do we fix it going forward?
Well, I think that, to be totally blunt with you, some of my investment banker friends might be getting a little bit greedy by doing so many deals. So I think that when you have some of these SPACs doing multiple fundraisers because, you know, the getting's good right now, you're causing a glut. And so that's why we're seeing some of these guys trading below $10. $10, let's just say for simplicity, is roughly the cash and trust. Might be a few pennies off, but that's what's happening, Chris. You're exactly right. There are just too many to choose from. I mean, every day, even in spite of, you know, this sort of SPAC wreck that we saw in 2 weeks, we're getting new deals announced all the time. So, you know, you've got to really be careful about which ones you go for. I mean, they're not all gonna fly like they did through February.
You mentioned some of these investment groups, you know, launching 2 or 3 or 4 or 5. Also, one of the trends that really popped up with SPACs is we saw, you know, celebrities, athletes, politicians, you know, either launch their own SPACs or attach themselves as advisors. What are your thoughts on that? You know, can we have, you know, celebrities be involved? Does it make sense, or should investors kind of just, stay clear of those ones with the big names?
Yeah, I mean, look, there are celebrities who turn out to be fantastic investors like 50 Cent, right, with Vitamin Water and, countless others. But, I'd be really cautious about betting on a Shaquille O'Neal or an A-Rod SPAC. I mean, it's just not their background, Chris, right? So the trouble I have, though, is it could be a little bit dangerous because the average person knows who those guys are much better than they know who sophisticated investors are, right? So if I think there's a risk that especially retail investors think, wow, this is exciting. Everyone's going to, crowd around whatever A-Rod does. It's dangerous. I mean, I haven't examined, we could talk about a specific, say in general to, a little careful with those.
So with so many SPACs out there, and again, not to name specific names yet, but just overall, for retail traders, what should they look for in a SPAC? Is it the past success, the sponsorship team, the target area, or kind of, as you mentioned, the financial profile as far as, growth and profitability going forward?
Well, I'm going to give you an example, if I might. I think that you should look at something like Ouster. So Ouster just de-SPACed, as the jargon goes, and it's trading under the Ouster ticker, I think OUST. So I did an interview with the CEO, and he was very, very competent. He knew exactly what he was doing. He had a very strong engineering background, from Stanford, and he'd been working on this for years. And here's the thing that I think investors need to pay attention to. When you see these revenue estimates, and that's what all these SPACs are allowed to do, revenue and profit estimates, you need to really drill down and make sure that they're backed by bottom-up analysis, that there's really something behind it. Because I think what I'm seeing sometimes is companies coming out and they've got big dreams and they're talking about, how great things are going to be 5 years from now. But if those forecasts really are not underpinned by, some serious assumptions like contracts, commitments, and that sort of thing, you need to look out. I mean, that's the danger here, Chris, right? I mean, it's wonderful and it makes sort of the back of the napkin analysis easy for us because we have those projections, but you need to look at them and say, how confident are you in those numbers, right? Because anyone can make a projection.
Awesome. So, let's dive into some of the individual names here. So before we look at, 2020, 2021, some of the past ones, you mentioned WeWork again. That was the big deal announced this morning. Give us your thoughts again. I mentioned how valuation has fallen significantly over the last 2 years. But CEO on CNBC, and after a couple of days of SPACs trading down on deals, we saw this one actually jump up, 11% during that interview today. So what's your thoughts on WeWork going forward?
Well, I mean, it's funny, Chris, because I'm sure you remember WeWork being as toxic as I do, right? But Masa really, doubled down on this thing. He put his top lieutenant, Marcelo Clauer, in charge. He remains the executive chairman, and they cleaned this thing up. They took a lot of costs out, and what I'm seeing in there is positive EBITDA at the end of this year, which is really something. I mean, it's just night and day compared to what we were looking at back when Adam was at the helm, and Adam's completely out, as you know. So, I mean, Chris, I think that there probably is some structural tailwind pushing this company because, look, people are not just going to go back and rent a massive office for 5 years, right? People are going to kind of creep back into it. At least that's what my company's plan is, right? So I think that there's probably a lot of demand for this, and I think that these guys are disciplined. I haven't dug into the corporate governance, but presumably, well, it would be pretty tough for it not to be better than it was under Adam. But as long as that all checks out, I mean, I actually think this could trade well. This is it's a decent business. I think that everyone remembers it as being a train wreck, but that was really specific to Adam, frankly. And Masa, is no dummy. He's one of the best investors, of our generation probably. And I think that he put his best guy in there to clean the thing up. So it actually looks pretty good to me.
Awesome. Yeah, we love getting your thoughts there. Again, we've seen so many of these companies go public with increased valuations from their last funding rounds. So to see, WeWork actually drop in valuation, to me, there is some opportunity there. But again, I worry a little about, the corporate work structure, going forward. Same thoughts I kind of had on View with the smart windows, for corporate locations too. So, give us your thoughts. So 2020, 2021, what are some names that stand out to you, as great long-term de-SPACed companies going forward?
So there are a few that I like, Chris. So why don't we start with another one that just came out this morning. So, I was just talking about how I think it's important to focus on profits, but I think AeroFarms is a great business. I've gone through as quickly as I could since it came out this morning, the presentation, talked to some other folks about it. It's not trading up too much. And I think there's a little bit of fear that it looks a lot like some of these other companies that, that correct these other SPACs have corrected so much. But this is a very good business. They've already got a head start. And the thing about that produce, Chris, is they're not going to have a hard time selling it. I mean, the same thing goes for AppHarvest. And what I would say about AirFarms is they're trading at about half the valuation of AppHarvest. AppHarvest was trading even higher, as you probably know, and pulled back down. So I like AeroFarms. I would also look at Skillsoft. So Michael Klein, of course, runs the Churchill Capital Complex. And we all know Michael Klein for Lucid Motors, obviously, which was quite a spectacle, the way that traded. But look at Skillsoft. I interviewed the CEO, Jeff Tarr, phenomenal guy, very competent. These guys are already profitable. It's a fantastic business. It's basically at work learning. So doing courses for compliance or various other skills. They've got something like 70% of the Fortune 1000 as clients already. It's a good business. It's trading pretty cheap. I like that one. Another one that I like a lot is Nerdy, which is similar in a way. So what Nerdy does, it's basically tutoring. So it's a way for people to remotely do tutoring. So they've closed all of their in-person facilities. They're gone. They went totally digital, which was smart. They're backed by TCV, which is a really well-known Sand Hill Road venture capital firm. Woody Marshall from TCV is on the board. I love that one. And the ticker on that is PACE, by the way. And the one for Skillsoft is CCX. Just one more for you, Chris. I like Holly. So Holly is basically a company that helps you soup up cars. So it's for people who want to do aftermarket add-ons to vehicles. That one's also a profitable business. It's merging with Empower, EMPW. So I look at those. The common theme among those three I just mentioned, Chris, is profitability. And I think that that's something that, at the end of the day, some of these guys that flew very high in February don't have any valuation support. I mean, if you're trading at 8 or 10 times sales, what's to stop it from falling to 5 times sales? Not too much. But if you've got, a reasonable EBITDA multiple, I think that you have valuation support. And so if things get ugly, there's going to be a bid.
Awesome. Yeah, great picks there. We love getting some kind of under the radar names there. We actually just did a March SPACness tournament. Our take on March Madness, picking some long-term winners. And of course, you hear DraftKings, MP Materials, QuantumScape, some of those larger, well-known names. So to hear some of these under the radar names, great insight there. One more question I have about SPACs, and then I want to dive into IPOs a little bit here. We just heard a report from Reuters that the SEC has begun inquiries into the SPAC process. I've talked about maybe we need to add some disclosures to press releases, the percent, that shareholders will own of the new company, rather than being in that slide deck, maybe going right in the PR. What are your thoughts? What needs to change in terms of disclosures in the SPAC market to maybe please the SEC or, improve this overall process?
I think, Chris, I think that what should be emphasized is probably, if I had it my way, just what I was talking about before, that these projections are not entirely reliable, and it's really incumbent upon the investor to do some homework. And Chris, to be honest, that can be done. They always say do your homework, and it sounds kind of like, okay, whatever, what homework can you do? But you can. I mean, if you read these things carefully, you can see, you can ask the kind of questions I was talking about. What percentage of that revenue forecast is based on committed orders and so on, sort of thing. Rather than, I hate to say it, Chris, but I think a lot of investors are basically investing based off memes recently, right? So when you have a hot stock, they're just not doing any work at all. They're buying it because it's going up, right? Rather than doing fundamental analysis. So I think that, the SEC can only do so much, right? I mean, they can't prevent people from being reckless, like all they can do is get the companies to, emphasize the inherent risks and, encourage people to, just read up a bit. And it doesn't really take that long, Chris. I mean, all you have to do is Google investor presentation for whichever one it is. It's a neat, in most cases, these decks are done pretty well. You need to go to the back, look at the revenue forecasts, and, look in there and see, who their partners are and that sort of thing. So, I mean, that's the advice I would give. But, I think it's good that the SEC is saying something about this because, I get emails from people all the time and I caution them. I say, please don't put half of your savings into this stuff. I get, I'll get an email from like a fireman or something, right? And I feel like this guy's worked his entire life protecting us, right? Like, please don't bet the farm on, some pie in the sky SPAC deal.
Yeah, no, that's great advice. Before I get to IPOs, Mitch wants to jump in here, ask some comments on some of those SPAC discussion that we just had, if you don't mind, John.
Yeah.
Yeah, John. So one thing I definitely want to point out that you made a comment on is looking at those revenues and also looking for contracts. And that was one of the that stands out to me always. That's one thing that I've always looked for. And especially when we're looking at, let's say, stocks in the space industry.
Right.
I think that's one of the biggest things that I've noticed in space is that's what I look for. I look for government contracts, defense contracts, whatever those contracts can be, because that I feel will actually get paid out over time. Then consumers can just kind of change their opinion, and then revenues just kind of don't match what the projections were.
Yeah. Yeah. I mean, contract business is always better. Also, I mean, another just to riff on that a little bit, if I can, what I really love is recurring revenue, right? So if I see contracts that last in general 5 years or something, I mean, that really helps a lot too, because, they're stuck with them.
Perfect. I think those are the things that I think investors don't do their deep research into that specific area, into the revenues, seeing how this potential is not just potential, how's it actually going to come up to fruition. So I'll let Chris jump in here with some IPO questions. It's going to be interesting. One of the things that I think Chris and I have been talking about is the comparison between IPOs and SPACs. So I'll let Chris expand a little bit more on that, but it's going to be an interesting time to see over time in 2020 and 2021, which performed better in the long run.
Yeah, awesome. So let's dive into IPOs again. We're a SPAC show, but we also do IPOs here. Obviously SPACs being the more interesting one last year, but traditional IPOs. So let's back up a little bit, back to 2020. What 2020 IPOs, are going unnoticed or being undervalued here, in your opinion, of course?
I like Snowflake. I like Airbnb. I mean, these are very famous companies, Chris. I don't have as many off the radar ones as I do in SPAC world, because I guess I've been spending a lot of time in SPAC land. But I think that Airbnb is a really good business. I mean, it would have been nice to own it at the IPO price. I think that businesses like that, which suffered during the pandemic but are going to rebound. Look, a lot of that's baked in, but I think that you should keep an eye on things like that, because these reopening things are real. I mean, hopefully a year from now things are going to look a lot different than they were. But I just want to talk about something related to IPOs versus SPACs. It's interesting, Chris, because just getting back to WeWork, we saw WeWork try to IPO, and now it's presumably going to succeed with a SPAC. But what's fascinating is the way that they're able to communicate, right? I mean, this deck, which I've gone through, goes into excruciating detail about how they've taken costs out, their very clear path to profitability. SPACs allow you to tell a story. It's very hard to tell a story in an S1 filing. And frankly, the laws don't really allow you to, right? So basically, there's something a little bit. I think if you ask, NYSE and NASDAQ, which I have, they both think that, IPOs are here to stay. It's not like SPACs are going to replace them entirely, but there are some serious limitations on telling a story. Sorry, I didn't get into any off the radar ones, but I just thought of that, and I hope that's a thoughtful.
No, of course, that's great. And yeah, we've interviewed several, actually numerous, CEOs of companies going public via SPAC, and we always try to ask, why a SPAC, and some of the most common answers, of course, are, the timeliness, right? You can get to market sooner. You can get that money sooner. And then also the forward-looking statements, right? So a traditional IPO, yeah, you can't go too far out. And, as you mentioned, I think you said 2027, some of these slide decks we're seeing, so many years out into the future with those projections. So, that's obviously a huge advantage here. So one of the, the most talked about and hottest IPOs for 2021 is most likely going to be Robinhood, filed recently. And then yesterday confirming once again, it sounds like that they'll offer shares to customers first. So what are your thoughts on the Robinhood IPO? And do you think that's a wise move to offer the shares to customers here first?
Yeah, I mean, I think it's a good marketing tactic, but I mean, frankly, Chris, I have some specific thoughts on Robinhood related to the GameStop short squeeze. I mean, what I basically observed happening, and I talked to people who are, on the floor at the at NYSE, market makers. There was some serious strain on the system, and the way that Robinhood had to respond to that by basically cutting off buy orders and getting a bailout, there was a concern about franchise risk there, Chris. I mean, I don't know how much this has been said, but that's what I'm saying it right now. And that's what, investors who have been in the game for a long time are telling me. And when I started to see Fidelity, Morgan Stanley, Charles Schwab doing the same thing, I was a little bit spooked. So I would say that that platform looks a little bit shaky to me. And one other thing that I'd point out is they have a lot of customers, but a lot of their customers might have like 3 shares in their accounts. So when I see those numbers, I'm going to want to know something like the average value in each one of those accounts. There's a lot of digging that needs to be done. I mean, yes, Robinhood is phenomenally popular, but you really need to take a closer look under the hood before you get in that one.
Awesome. So what are some other 2021 IPOs that maybe investors should keep on their radar here for the back half of the year?
Well, it's interesting because I think that some of these companies are not sure which path they're going to take, right? So when I was talking to bankers, 2 years ago, a SPAC was like the third choice. Sometimes now it's the first choice. So I don't know that we're going to have a huge year in terms of regular way IPOs. I mean, if there are a couple that you want to drill down on, we can do that. But, the action continues, believe it or not, despite this supply glut, to be over on the SPAC side.
All right. So one of the areas that I've been focusing on, John, and you can maybe let me know if you've been seeing some more kind of attractiveness to this area, is programmatic advertising. And just to mention an IPO, you got PubM, that was really one area that at the beginning of the year stood out to me as a transition into the digital kind of transformation. And also I think the pandemic just really pushed the gas pedal. So let us know a little bit. Have you thought about that area?
Yeah, I have. It's interesting. Working in the media world myself, look, the holy grail in advertising is actually connecting customers' purchase decisions with dollars spent. And there's actually it's funny you mentioned that. There's actually a company, Digital Media Solutions. It was a SPAC, and it's out there, and that's what they do. I mean, that's very much the future. I mean, if you've ever been in a situation where someone's making an advertising purchase, they want to know as much as possible about how effective it is. And if you go back 20 years ago, it was very hard to tell, right? Because it would be like a print advertisement in a magazine or a newspaper. So I think I think that's a huge trend. DMS is one way to bet on it, actually.
Yeah, that's actually the one that I was thinking about, but you led right to it. So
sorry, man.
I set up the home run for you, and you hit it right out the park. So can't blame you for that one. That's one on my radar. I look at some of the high flyers also, MG&I in this, and also the Trade Desk that have been doing this for years and years. But as we even saw in a Kathy Wood webinar talking about how TV isn't just doing the same advertising anymore, and you're going to see that continuously decline there. So that's one area I'm definitely watching for new IPOs to even continue coming.
Yeah, I'm glad you brought that one up because it's a bit of a complicated business. And I mean, I actually wrote a piece about it. If anyone wanted to check it out, you can find it on our website. But I think it's absolutely the future. People are not going to shell out advertising dollars if they don't know that they're getting concrete results. Those days are just gone. CMOs just don't work like that anymore. So I'm totally with you. I'm glad you brought that one up because that one's totally off the radar.
Exactly. I always try to look at the underlying assets behind what I think will first move, and then you'll see the kind of the after effects.
Absolutely.
John, is it the digital media solutions gives advertisers what they really want? Is that the article?
Yes.
Yep. So just drop that in the chat. So guys, if you want, go ahead, take a look at that. Again, ticker DMS. This one was actually in our SPAC Madness tournament. It did lose in the first round. I think a lot of people just aren't as familiar with it. But once I saw what it is that they do, I know Mitch and I both talked about it and, added it to the watch list. So thanks for, bringing more color in that space there. I just have a couple more questions. I know we've kept you for, a half hour here. So we talked Robinhood, maybe offering those shares pre-IPO. SoFi this morning, so ticker IPOE, announced plans to launch a platform to allow its users to buy shares of pre-IPO companies. What are your thoughts here? Should investors look at this, or is this going to be, one of those risky situations that maybe people don't understand how to value those companies?
I think it's a really interesting question, Chris, because, people talk about SPACs as something similar. I mean, in the past, a lot of these businesses like AeroFarms, for instance, this would never have gone public this early, right? So a lot of these SPAC deals look a lot like, venture capital opportunities. I think that that's an interesting idea that they're doing that. And I would say anytime you hear about democratization, be a little careful. I mean, does anyone really want to help the little guy? I mean, I would just say that if this is available, that people need to do their homework in the same way that we talked about, before. But by the way, SoFi is an interesting company, and there are a few others in the fintech space that are going public, OppFi and Finance of America. So that's it. I think that's actually an interesting space, and I don't need to advertise this if it conflicts with your show, but next Wednesday at 1 o'clock, we're going to have CEOs of 3 of those companies on a live event on IPO Edge.
We will get that link and we will share it. We have no problem with you advertising on our show. Again, we appreciate you coming on. Replay, yeah, Finance of America is an interesting one. We've had Patty Cook on the show twice. Big fan of her. Big fan of that company and how diversified they are. They're not just a mortgage company, great, spread out through different industries. So yeah, we'll tune into that interview as well. If it was during our show time, maybe not, but 1 o'clock, is outside our show window at least. So just one more question I have for you. I mentioned it during headlines today. So this week we saw several IPOs, Cricket, Vizio, and a couple others actually trade under their pricing level. What are your thoughts on that? And do you think we see some of these companies start to pull their listings and wait for the market to react here?
Chris, I was wondering that myself after that SPAC wreck, let's just call it. I think that and that there were a few things going on. There were interest rate concerns. You might even argue that the Lucid announcement upset some people. It's not good to see them break issue, but honestly, the VIX is not that high right now. I think that the market's somewhat choppy, but I don't get any sense that. I mean, I actually asked, in fact, on the SPAC side about deals being pulled, and the answer was basically nothing has been pulled. But there are concessions that are being made. I think like the warrant coverage might change. Things are a little more investor friendly. But I'm not that worried just yet.
All right, so I'm going to go ahead and jump in here and ask a question from the chat. That's one thing that really separates us, is that we're able to go to our chat and get questions from the chat. So here is, and you kind of prefaced a little bit. I mean, we could talk maybe the Lucid deal, but does it hurt negotiations when retail investors really start speculating on a deal on social media? I mean, we were talking about CCIV before when they were talking about DirecTV, and then we thought, that we don't see that rumor being true. But then another rumor starts, and then you saw CCIV rip off. Let us know. What do you think about that?
I mean, absolutely, it's problematic. I mean, CCIV is the poster child, so let's look at that one. There was no confirmation of a deal at all, and it was trading at $60 a share, right? they announce it, and obviously it was buy the rumor, sell the news. So a lot of people got hurt, and I think it made the negotiations incredibly complicated. And remember what wound up happening? The PIPE came in at $15, which was unheard of, right? They had to actually come in at a higher price than the IPO investors in the SPAC. So yeah, it's very problematic. But I mean, frankly, I don't see it stopping. I mean, do you guys? I mean, Reddit's not going away. People are not going to stop wanting to talk about this stuff. I mean, look, I think that investors probably got burned, when all these guys pulled back, but the interest is not gone. And these stimulus checks just came, right? So there's more money to go play with.
Mm-hmm.
Yeah, no, excellent point. CCIV, of course, well known there. I do own shares of CCIV. I did own shares before. I sold some of them. Again, you saw the pre-deal, pricing there, just insane. Yeah, I think you're spot on. We've got Reddit, we've got Twitter, we've got all these different places where and we're guilty of it too, right, on the show, where we talk about rumors, from Bloomberg, Reuters, and it can lead to spikes in these shares, before a deal is announced. So I don't think that's going away. And I appreciate that chat comment and your thoughts there. I think maybe it does hurt some of these deals, especially in terms of valuation. If you're a company trying to go public and all of a sudden you see shares of the company that might take you public jump 20%, maybe you think, hey, I can get a couple extra dollars out of this deal because people want my company to go public. So just my thought there. But Mitch, what were you going to add?
Yeah, so one thing I mentioned, and I'll point at my own little name here that I use for Twitter, is story investors. And I think this is really what you're starting to see, and just starting really. I've talked about it that sometimes, fundamentals, technicals, a story sometimes matters even more in this market, and the hype behind it. And that's what I'm focusing on. And that's what that's where I came up with the name, really, because at the end of the day, now that's what I see. It's a social trend. And if you're following the social trends, that's how you go ahead and you can kind of find these stories.
Absolutely. I was just going to add one thing quickly. I mean, just over the years, if you ask an investment banker about how they feel about leaks, they do not like them. It really throws a wrench in negotiations, because I mean, if you're talking about this is kind of a peripheral issue, but if it's a stock transaction or something, changes the value of the currency, it's a mess. But if reporters are paid to get these scoops, so it's not going to stop.
Yeah, excellent point there. So that's going to wrap up questions today. We kept you longer than I think we originally planned on, but holy cow, great insight into SPACs and IPOs. So we enjoyed this interview. I hope you did as well. So again, guys, joining us on the stream today, John Janerone from IPO Edge. I dropped the link to that article on DMS again in the chat. Click on that link, find out more about DMS, and then also you can visit the website there. And as he said, CEO interviews done by himself as well. Great resource out there for SPACs and IPOs. So again, John, thanks for taking time out of your busy schedule for joining us on SPACs Attack today.
Thanks a lot. It was really great to talk to you guys.
Thank you. Have a good one.
You too.
All right, guys. Hey, well, you guys heard it there. One thing I definitely love that we've been doing is not only reaching out to executives, but trying to bring some experts in the space, right? And as you guys can see, that was such an enjoyable experience. So if you guys got some value out of that, definitely smash the like button. I know Chris and I enjoyed it. I don't even need to ask Chris. So that's what it's all about, guys. And that's what we do here on SPACs Attack, is that we bring the information, because there's too much out there for, let's say if we did once a week coverage, guys, like you'll see in the other major news providers, you'll see like once a week or maybe once a day kind of mentions. That's not what we try to do here, guys. We try to really give you a little bit more information. And that's what SPACs Attacks really is about, that everyday outlet so that you can get the information you need to be your own expert in this field. And that's what it's all about.
Yeah, awesome. Guys, smash the like. If you like John and if you want him to come back on, go ahead, press 1. We've been trying to get John on the show for a little while. He's a great resource. He's got years of experience in IPO and SPAC coverage. Again, as Mitch said, we're not just going to bring CEOs on. We're going to bring experts in the field. You know, Mitch and I are pretty knowledgeable, but there's always room for more experts within IPOs and SPACs. And here you just heard from, you know, one of the big names, IPO Edge. I know I've been following that site and also his column he talked about at the Wall Street Journal before that, you know, for years. So I liked some of those under the radar picks, right? We got Skillsoft, CCX, we got ticker PACE, and then, man, Mitch, DMS, Digital Media Solutions. That one, as soon as I'm done writing some of these articles today, I'm going to have to go read that article from John. And this one's going on the watch list for sure, right? We talked about it, SPAC Madness. This was one that I wasn't familiar with, and I have no problem admitting that, right? There's hundreds and hundreds of SPACs. I may be Chrisopedia, but I can't know everything. So DMS, that's getting added to the watch list. That, you know, new media advertising. I love it, and his comments. Awesome.
There's one thing that stands out to me, guys, is in that you know, one of the things is I try to do sometimes what's you know, like how you talked about bottom up approach. Sometimes what I like to do, guys, is so instead of trying to like maybe look for a stock, let's look for what I think is going to be more of a macro trend that can start a big trend in an industry. And then you start looking up the stocks that are in that industry versus let me look for a stock that's great versus let me look for an industry I think can get hot. And then I can look for the plays that are on the support and try to diversify in an industry that I think can get really going. And that's how I felt with programmatic advertisement, just because of the push of the pandemic. And I'm going to have to tell Jason Raz about this one, you know, because he was looking at MGNI, but maybe, you know, DMS is a better discounted play where he could get a better value. But we'll keep an eye on all these. You know, you had Pub M, you have Trade Desk in that area. And it's an interesting area as we've seen kind of the development, because at the end of the day, I don't care anymore about certain advertisements. And you don't want to be presented, let's say, an advertisement for, I don't know, you could say women's lingerie. I don't think Chris is buying women's lingerie anytime soon. So I would rather send Chris an advertisement about a game, about Roblox or
sports betting
sports betting. I think Chris's eyes would be like, whoa, what's going on here?
Mitch, are you ready to bring up a chart? I just saw a comment here in the chat. You ready
Let's
to see what
Let's do it.
You ready to see what the big gainer is today?
Yeah.
CAPA. Kappa.
Kappa.
Up 10%. This is one that I own. We talked about this one before. ARK Funds is an investor in the pipe on this deal. I don't know what the news is out today or if it's just moving, but someone brought that one up in the chat. So Kappa up 10%. Keep an eye out on this one, and we'll try to find some news on why this is moving higher. But it is starting to rip.
All right. So one thing I did mention is I had Kappa, really, guys. I had this a little while ago. I was able to sell for a very small profit before it came down underneath my level. But my level that I was in actually is even higher than the price right now, guys. I was in at 12.65, and I sold out a little bit above 13. Not a big profit, but I just felt it was coming down below my level, and I didn't want to just watch it wash through. So this one's an interesting one. I think in the long run, Kathy Wood really likes this one. Jumped in on the spike day, not the day that it was at the bottom. And that's what I'd point out, guys. And because she jumped in on the spike day, it always interests me because that means I can get a better price than probably where she's in. And that's what I always try to do, guys. Better price than the big fish. Because if you get in a better price than the big fish, then when the big fish making money, guess what? You're cashing in, baby. And that's what you want to do sometimes.
All right, guys. So Power Hour is about ready to start. I don't know if Luke's in the stream and wants to hop on, but I know they've got some exciting guests coming up on their show today. And guys, if you didn't see former SPAC, HOFV, Hall of Fame Resorts, we did do an interview last night at 4:15. That is on our YouTube channel. Again, talking about NFTs. If you're interested in NFTs and you want to know more about the space, Coming up on Power Hour, they've got WiseKey. That's ticker WKEY, one of the hottest NFT-related stocks out there. And then they also have an interview with Smile Direct Club. That's ticker SDC. So 2 big interviews coming up on Power Hour. Make sure you stick around and stay tuned to hear more from Jason and Luke and get those exclusive interviews. Again, we've got exclusive interviews all through the day, 8 a.m. to 6 p.m. and looking to extend those hours going forward too. What do you think, Mitch? You excited to hear some more on these interviews, the other show today?
Well, I'm going to be paying attention. I'm not going to get in too much about SDC. I'm gonna try to keep my hands tied back, but I'm watching that stock just because I have some opinions about the story, but I need to watch it. So I'll be paying attention to the interview, just like I'm pretty sure a lot of people will.
What's up, Luke?
Yeah, Chris, I just wanted to pop on and say awesome job yesterday.
Thank you.
Yes. The NFT killer right here.
Much
Chris
appreciated.
Katje.
So yeah, HOFV, we've had him on SPACs Attack. We've had him on Power Hour, and then we did that exclusive interview yesterday. Big shout out to, Zoli and Aaron as well on the Benzinga team for getting some of these exclusives, some of these interviews lined up. We can't do it all ourselves, so we have a great team here at Benzinga. But yeah, we're all about bringing you guys the information, right? I asked the hard questions. We tried to get, answers on the timeline of.
You didn't ask about the desk bed situation. I
know there was lots of comments on his situation.
That was a pretty good setup.
I actually showed the picture to my wife last night, and I said, "Hey, what do you think? Is this an office? Is this his basement?" Someone commented and said he was on his yacht. And I don't know about that.
Oh my God. Yes. That's the narrative I want.
Yeah.
If he was on his yacht and that's his yacht bedroom, I'm going to buy the effing stock.
That's a bullish sign right there. To me, I think he was in a guest bedroom in his basement because it sounded like his audio was a little spotty.
Yeah, Chris, so you just got to ask the hard-hitting questions, okay?
I didn't see that question in time, or I would have asked it. We've had to ask people before. We had a CEO on before who had some kind of like holographic lamp in his background, and everyone in the chat was like, "Chris, ask him what's behind him."
Wait, did y'all see the Jack Dorsey Bitcoin clock?
No.
Oh,
Google
Lord.
that. Everybody in the chat, Google that. Jack Dorsey Bitcoin clock. He did that congressional hearing, right? And it looked like he just had a clock in the background. No, I think it was counting up the number of Bitcoins mined over time.
Oh my goodness, that's awesome! Awesome.
His level of not giving a fuck at that congressional hearing was top notch.
Yeah,
dude, I'm jealous of the guy's beard.
Yeah, for sure.
Hey, but I wanted to give a shout out to Chris Dipper in the chat saying that outstanding interview with HOFV. You're a better interviewer than anybody on CNBC. So I wanted to give you that shout out.
I mean, guys, I just try to do my best. Again, I want to do these interviews because it's all about bringing you, our loyal viewers and fans, the information, right? We're going to ask positive questions. We're going to ask the hard questions. We're going to let these companies, tell it how it is and give the information. And again, NFTs are hot right now. You saw YVR on Power Hour last week.
I've got opinions on that one too.
HOFV last night, and now you got WKEY today. So if you want to hear more about NFTs, you got to stay tuned to Benzinga TV. You're not getting these interviews anywhere else. Luke, what's coming up on Power Hour? What do we got?
Right,
before you roll that intro?
Yeah, so Power Hour. I mean, we got some stocks to talk about today. So YVR, right? We interviewed the CEO earlier this week. The stock got halted on a circuit breaker mid-interview. And we had our biotech conference. So I didn't get to digest that and share any opinions. So I've got some thoughts there. We did examples on I believe Monday where we sold covered calls against Visa. We did cover calls against Visa, so we sold calls against our stock position. We sold puts against Palantir. I said we're going to track these positions throughout time so everybody can learn and figure out, how do they move as the stock interacts. NFT idea sheet. We've got 50 NFT ideas pulled together from Zinger Nation. Alibaba getting fucking hammered. So let's talk about that one a little bit. GME chat challenge, guessing the price of GameStop. So, I mean, I don't know. I'm going to try to do all that in the first 30 minutes.
That sounds like a lot. Plus, you got those interviews too, Luke. What interviews we got? We got Smile Direct Club.
Yeah, so we have Smile Direct Club 1 at 1 o'clock, 1:30 Wise Key, a super hot one, and then 12:30 favorite of the chat, Chanlo is going to be joining us talking some options trading.
Awesome.
Yeah,
awesome.
guys, listen to that one. I'm going to have him do his backstory again, but he was homeless for a period of time, and then he became an NYPD officer. And it's a cool motivational story. So we'll hear about that from him again too.
Awesome. All right, guys, don't go anywhere. Power Hour. Let's kill it, Luke.